we start with my portfolio. So my portfolio is basically the place to store all of your property information. And of course, also the mortgage data. And I will switch in the views to the mortgage view. And here, basically, I can get all the details that I need about my mortgages. So I can see the current rate, and I can see also the type. So in this is the demo account, everything is fixed.
Oh, well, there's somebody that's not too worried.
Yes.
Well, I think most landlords have a mix of fixed rates and variable rates. I've always kind of rolled like that, really. But if they're on the lender's SVR, they will see their monthly payment going up, and it could continue to go up if the Bank of England continues to raise the interest rate there. So that's such a useful thing, Aviram, because of course, if you're thinking of remortgaging, you could still be in an early repayment period, and that would probably make it not very worthwhile to remortgage. So having all this information at your fingertips, and as I mentioned, updating it every time you get a letter from your lender saying your interest rate has gone up, your monthly payment has gone up. It's keeping a full understanding of where you're at with your cash flow. It's just, I can't stress the importance of this.
Yeah, absolutely. Another important thing, as you mentioned, are like the early redemption fees and the expiry dates. So basically, you can see that usually after the rate expiry date is over, the rate can jump to the revert rate. It's usually much higher. It's usually the SVR rate. So you need to be on top of also the expiry rates to do the product transfer or rate switch, or to remortgage at this point. On Lendlord, another important page is the mortgage search. So in the mortgage search, first you can search for a specific case that can be a new mortgage, a new purchase, and then you can see these are basically, usually we retrieve live results from the lenders. I'm saying usually because this might be something that was not up to date. So just click again on the search, and then you will receive the newest rates from almost all of the buy-to-let lenders currently have products available. And you can also play with the fixed rate period. So let's say that in this case, I will take it to 5 years. Then I believe the rates will be a bit different. But of course, you can secure the rate for a longer time. So it's also important. So it's like the rates are now a bit higher. And another important thing, when you look at a mortgage product, don't look only on the rate, there are also the fees. So if it's a longer period, then basically you can take the initial fees for we take it for the entire 5 years. So if it's like for 2 years, perhaps it's different, because then it's a shorter period that you need basically to take into account the fees. But you can also order by and basically see the results on different, based on the sort by different parameters. And another important thing, and we discussed about inflation. So on Lendlord, you can use the deal analyzer for two things. One, when you analyze a new property deal, and I will show in a sec, you can also evaluate your existing properties. So let's take a potential deal. We just put some numbers here. So you'll receive the first year metrics and the long-term metrics. And then in this section, the long-term assumption, then you can define four things basically: the occupancy rate, property appreciation over the years. We take it from the postcode automatically, but you can change this based on your thoughts or data. Rental appreciation and annual inflation. So let's take a look on this deal. So in this, let's take it even to 2% here. Okay. So in this scenario, this is my return after 10 years. If I now increase the inflation rate, then you can see that the total return is going down, and also the internal rate of return is going down. So what happened here? Basically, what we do in our engine is the expense side of managing a property will increase because of the inflation, and the rent currently is rising by 1%. But let's say if the rent will also go down, then the return will go down. If the rent, as you mentioned now, also the rents are going up, so perhaps you can balance the inflation. So the relationship between the annual inflation, the annual rental appreciation, basically will impact your long-term return when you hold a property for 10 years, 20 years, and you can go to the prospect report to see also it on a chart. So you can see in this chart, basically the development of your cash flow over the years based on your assumptions. And you can do the same, by the way, if you go to my portfolio and click deal analyzer, you can then evaluate an existing property for the next 10 years as well, with playing with the